Let's talk real estate investing and how it can make you a lot of money if you follow the 1% rule. The 1% rule in real estate investing measures the price of an investment property against the gross income it is expected to generate. For a potential investment to pass the 1% rule, its monthly rent must be equal to or no less than 1% of its purchase price, according to Rocket Mortgage. Patrick Grimes is the CEO and founder of Invest on Main Street, with holdings which include general partnership ownership in multifamily real estate, a portfolio valued of more than $416 million, including more than 3,000 units across the southeastern United States and Texas. Patrick has been active in real estate investing since 2007, including purchasing land and distressed assets, renovating them, and then stabilizing them for long-term cash flow. Patrick founded Invest on Main Street to help investors build wealth through tax-advantaged cash flow while limiting their exposure to market volatility and inflation. Grimes joined me this week to have a conversation about essentially smart real estate investing, what's made him so successful in the field, and a bit of his personal side as well. It was a wide-ranging, educational, and thoughtful conversation, which I hope that you get value out of. So, without further delay, I'm Kevin McShann. Let's have this conversation. Patrick, if you're ready, I'll take a moment to welcome you to the program. And I'm super excited to be with you this afternoon to talk about your background in business life and everything in between. Great to see you, and happy California Wednesday, my friend.
Thanks, Kevin. I appreciate it. Maybe we're having slightly better weather than you here, but we're in the middle of some kind of solar dump, so you don't see blue skies behind me for the first time in a while.
Well, you know, it's all about perspective and how you look at it, Patrick. Every day is a new day to make a difference, right?
Yeah, exactly. Right.
Absolutely. And now, Patrick, I know that you're a CEO. You've got some shares in a real estate industry, and you're a new dad. So I'm wondering if you can tell me about what makes you so fabulous and how you got to where you are today.
What makes me so fabulous? I don't typically use that word to describe myself, but I'll give it a go. So
there's the first time for everything, right, Patrick?
Yeah, there you go, right? And if something makes somebody fabulous, then maybe being a dad would be that thing. So maybe I finally reached the pinnacle of fabulous, where I've got a 2-week-old newborn. So I've got my espresso in hand here, and I'm ready to go for this today.
Yeah, absolutely. And it's my job to send you best dad tips, right? I'll write the book and then I'll send it to you once I have kids, okay?
Okay. Yeah, so I came from an engineering background in machine design, automation, and robotics. invested in real estate very early, lost it all in 9, 10, and 11, learned a lot of lessons back then pivoted to engineering, got a master's in engineering and business, and then went from there back into real estate in a parallel moonlighting kind of thing. Then scaled into large multifamily assets, became full-time in real estate syndication, raising capital from passive investors, and then diversified diversified energy funds as well that help people diversify. And so I'm CEO of Invest on Main Street, and that's where I came from.
Yeah, so just following up on that, Patrick, what does it mean to you to invest sort of in Main Street and the American economy, and how important that is to you personally and as a business owner? What does it mean to you?
Well, it is critical that individuals learn to invest just outside of the traditional investments. If you read my passive investor guide on my website, it's investonmainstreet.com passive investor guide. It talks about diversification and how critical it is. The middle class only has about 7% of their assets in alternative assets. That's out of the stock market, out of their typical 401k IRA or what the financial planner has them in. But the high income earners have 25% in alternative assets, and ultra wealthy have 50%. So the search for those assets and figuring out which ones are the best returning that will provide cash flow and appreciation to allow you to retire faster and grow through retirement. That's what we're all about, is helping people find and locate those and presenting those options for investors to be able to do what I've done, and that's escape the grind, right? And be able to have the freedom to choose what they want to do on the other side.
Yeah, just building on that point, Patrick, what do you think it means to retire smartly from a financial perspective? Because I know that's, like you said, what you help people do on the other side to sort of get their life back. So what do you think it means to really retire and invest smartly?
Well, it's funny because financial freedom, some people, I always talk about it. I consider it more time freedom, location freedom. What my wife and I, it was so funny because COVID hit, things shut down in Los Angeles where we were. It was, our beautiful home became kind of miserable, but we upped and moved to Hawaii. It was her idea, and I made it happen 2.5 weeks later. But that kind of freedom, that the ability to not be worried about geographically where we're at, financially strapped, to be able to turn kind of lemons into lemonade was just awesome for us. And I still flew back and forth. Right now, she's taking time off work to raise our child, and that's time freedom. She gets to choose what she wants to do. And man, I built a $500 million portfolio in apartment investments and workforce housing. And now we're launching into other areas to help give back and figure out ways for our investors to diversify. It's something I like to do. I enjoy talking to investors. And, that's not always the case. When I was doing machine design, automation, and robotics, I was having fun, but I'll tell you what, it was a slog. It was very, very tough. And I wasn't always doing something for me. I was doing something for somebody else. And I didn't always agree with what I was doing, but I had to do it anyways. All that freedom that we have now, we owe to our investments in all kinds of investments outside of the traditional ones.
Yeah, so picking up on that point, Patrick, what do you think it means to have a diversified real estate and business portfolio? How can other people get to the place where you find yourself today? So what do you think it means to diversify your portfolio?
Well, so diversification has to do with whether or not, if, say, for example, one vertical of the economy lowers, does your net worth and your cash flow and your ability to retire lower with it? If the stock market, for example, lowers, then most people's 401k, IRA, stock portfolio, financial planner, but all that tanks with it. Being diversified into other verticals like real estate, which follows different curves, or energy, which follows a different curve yet, which allows for part of your portfolio to be on the upswing while another one's on the downswing. Now, that's true diversification. In addition to that, if you diversify out of what are traditional investments, stock market portfolios, then you can learn that you don't always have to pay taxes, because in our real estate investments and energy investments, they're highly subsidized by the IRS. We trade forward, collect tax-free cash flow, and never plan on paying taxes. Most of our investors don't. In addition to that, inflation, which is the big buzzword today. If you're not diversified out of the stock market, you're taking over an 8, 9, some people say 15% hit a year on the devaluation of the dollar. Well, I've got articles in Forbes where I make the argument that income generating real estate is perhaps the longest term inflation hedge, meaning that our apartment investments, your net worth and your cash flow grows with inflation. You're hedged, you're safe. That's diversification. Same thing with energy. In fact, in this particular season, energy might perhaps be, in these years where we're seeing this peak inflation, better than real estate as an inflation hedge, because while energy is going up, we see real estate waning a little bit because of interest rates. So it's a very unique time to actually invest in energy. Those kinds of diversification plays where there's no debt in the energy fund. There's no effect of interest rates. Macroeconomic and political movement of the need for more domestic production of natural oil and gas driven by things like OPEC and Russia misbehaving. Those are completely different market cycles than what you're seeing in the stock market and real estate right now. That is true diversification.
Yeah, absolutely. And Patrick, I'm also curious to ask you about sort of the stock market and Wall Street, because it was recently reported that 2022 was one of the worst years on record for the markets, Patrick, and Wall Street itself. And I know that you're not directly involved in Wall Street itself, but based on your experience, I'm curious to ask you about whether you think the markets will have a bounce back year in 2023.
Well, I'll tell you what, it won't have a bounce back. It won't have a bounce back that'll equal to just even the tax advantages of investing in multifamily or energy. Because just the tax advantages alone are far greater of return than any bounce back in the stock market. And if you look at the stock market over the long 25, 30 year, and if you, again, my passive investing guide, it's a free download at investonmainstreet.com. I do the math and I show how the S&P has only shown a 7.5% growth over the last 30 years. The bounce back that we talk about in these micro swings where people ride these roller coasters from their armchair fearful of their retirement, man, that's just playing at the wrong table. And so I disempower that whole conversation about bounce back, because really the trend is your money's not growing at a rate fast enough to pay for inflation, and it's going to be taxed on the backside. So you're sitting in a zero-sum game inside the stock market, regardless of whether or not there is a, quote, bounce back. You just have all your chips at the wrong table.
Yeah, absolutely. And Patrick, I know that you've been in real estate investment since about 2007, and you've purchased land and other distressed assets and sort of reviving and renovating them. So I'm stabilizing them for a long-term cash flow. So I'm curious, what do you think's been the key to your success, and what do you think is the biggest lesson that you've learned in business?
Well, so if I can, I actually have a book where I talk about that, and it's called Persistence, Pivots, and Game Changers, Turning Challenges into Opportunities. And I'm happy to offer a free copy of this to any of your listeners if you go to investonmainstreet.com/book. It did make an Amazon #1 bestseller. Phil Collins is a lead guitarist of Def Leppard's on here, NFL, NBA players. But persistence is the answer, and pivots is the answer, and turning challenges as opportunities is the answer, because when I got into high tech, I was very excited and happy and having a great time as a snot-nosed mechanical engineer. But when I got advice saying, hey, you need to pivot with your investment portfolio into real estate, I did it, but I failed because I invested in risky assets and development that didn't appreciate. In fact, it tanked during 08-09. But the persistence to crawl out of that, got 2 master's degrees in business and engineering, did well in my career, and then get back into real estate, pivoting then to recession resilient markets and cash flowing assets on day one that can ride out a recession. That was the key. And then scaling it from single family up to multi with the same investment thesis in large apartment buildings where I could take even better tax advantages and have on-site property management and force appreciation rapidly through renovating units. That was a long journey. It took me 2.5 years just to persist through that. But that pivot, it was incredible. And then my family actually collects oil royalties, and I knew I needed to be diversified along with my investors. And so launching into the energy space is part of that. So those pivots, I got to say, was absolutely critical, and it's been a really fun journey along the way.
Yeah, absolutely. Patrick, I'll share just a little bit about myself. So I was born with the spastic quadriplegia cerebral palsy. It simply means that I don't have enough oxygen in my legs to walk normally, and I was actually told at 9 years old that I wouldn't be able to walk without assistance for the duration of my life. And you bring up the idea of pivots and making nimble moves in business. So I'm curious, how do you think you would define the word inclusion as it relates to business and in life? What does the word inclusion mean to you as it relates to making a successful pivot in life?
The word inclusion, well, maybe it's including other people's perspectives, because had I kept at it in engineering, I'd still be working until I die. I would be struggling to put enough money in my 401k to retire late in life and then see it dwindle down. And I included other people's perspectives and then forced myself to moonlight my investment portfolio in real estate. Then when I got into single family, I realized I was spending my time away from my family, friends, and hobbies because I was out of state buying, renovating, and flipping homes while doing a very demanding job. And my wife walked in, or my soon-to-be wife, and I realized, you know what? I can't do this and marry her. So maybe it's the inclusion of that perspective that I needed to listen to my pals that said trade up and partner and do larger assets in multifamily, and include my wife in that journey along with me. And I brought her along, and it's been a great journey.
Yeah, absolutely. Life is all about experiences, isn't it?
Absolutely.
Yeah, and Patrick, I know one of the reasons you started Invest on Main Street was to help investors build wealth, as you've said as well during our conversation, and cash flow. So how do you think people can build sustainable success as it comes to wealth and business success as well?
Well, so my general sense is take a piece of your 401k or your IRA, and I have articles in Forbes on how to use your qualified plans to invest in alternative assets. And I work with investors all the time to get stuff out of that wild ride of the roller coaster and put a piece of it to work in some alternative investments which cash flow and appreciate and protect yourself from these market cycles. Also, people that are slaving away in single family rentals like I used to be, trying to chase property managers or worse, managing themselves and having a hard time finding deals without sacrificing their family and wife and hobbies. I help them do 1031 exchanges. They can sell their properties and then partner with us with the proceeds without paying taxes and trading up into larger apartment investments, not nearby you where you need to control them, but in growth markets where we have regional and area managers, property managers, and techs, and everything you need to sit back and enjoy as we drive the rents to market and refinance and trade you forward. So I help out, and we talk about that in the book as well.
Yeah, absolutely. And I know a part of your success, Patrick, is your ability to communicate authentically with people and really valuing the people you serve, whether you build them a place to live or invest in. So tell me about the importance of valuing people and building relationships in the work that you do.
Well, I think that investing is not a zero-sum game, and I think part of the reason why I'm so excited with where I'm at right now in life is that we get to choose where we spend our time. Every single investor deck that we put together for our multifamily deals, where we're buying properties that are distressed, have been neglected, I walk all those units and I see the lives of the residents when they've been neglected, and it drives me crazy. I get pretty upset about it. But there's a reason why those landlords, those owners, they're losing their building because they didn't take care of the residents. And inside all of our decks, we have not only that we're providing recession resilience and inflation hedged and wealth building with tax advantages to our investors. We're making a good impact there, but we're building a cleaner, safer, and improved living experience for our residents. And that's really important. And it's part of that has driven the success we've had. Not only because, and especially through COVID, because a lot of the residents had the option to pay. But when they saw us come in, and I walked properties before where we've done due diligence and found unanswered maintenance requests that we printed out. It was as thick of a ream of paper. I mean, it was landlords that had over 20% of the residents not paying, all kinds of problems. And we've walked those before. And then when we took those properties over, they've seen a dramatic change, an improved living experience, a safer place, and a healthier place with refreshed amenities that support their betterment in life and living. And so we do our best to not only be a good impact on the communities and our investors as well, but to make sure that we're socially responsible along the way.
Yeah, absolutely. And as you mentioned, you're part of the Forbes Real Estate Council, and you've also authored articles, as you said, on leadership, and you've also been a part of expert panels. So tell me about the experience with Forbes and really how that sort of elevated your profile and the importance you put on giving back in that way as well.
I really appreciate, these are excellent questions. a lot of these questions I haven't gotten in a long time, but it have great answers. So I tend to be that engineer, analysis, paralysis, data analyst type of guy. And it was the case that when I was doing deals, I was in the kind of the basement, analyzing, then traveling to properties and coming back. I wasn't the guru out talking about it. There's lots of gurus out who are talking about it but aren't doing anything. But I was actually out there doing stuff, and I got a lot of encouragement that I should get my story out there because people will resonate with the story of working hard and being diligent and making your way through and out of corporate world. And then I started saying, well, you know what? Maybe I will. I got an invitation to join Forbes. I turned it down for a whole year, but I eventually picked it up and said, hey, I'll join. And I immediately started writing articles on topics like asset protection, single family versus multifamily, inflation hedging, and how to invest in those ways, and how the difference between direct real estate ownership and a REIT and the disadvantages of REITs. People don't realize all kinds of articles that have made how to 1031 exchange or rentals into larger investments that will produce greater wealth for you and free your time. People started really appreciating that. On expert panels, I get floated questions on a regular basis. How would you do this or that? Or how do you use AI? Or how do you manage all kinds of stuff in your businesses? And we band together to, put some of our ideas on paper and provide the best responses we can. It's been a really cool partnership with Forbes, and I've learned a lot, and there's a lot of really great people involved there. And I do think it's a way to give back. Most definitely.
Yeah, absolutely. It's never too late to grow, expand, and diversify, right, Patrick?
Yeah, exactly. And you know what? When I say, hey, there's some issues with your single family portfolio, do you realize that there's legal and financial risk associated with asset protection? They're like, oh yeah, sure. I'm like, well, why don't you take a look at my Forbes article? But it's been peer reviewed and checked and cited, sources cited and edited, and then let me know what you think. And then people, they pause for a minute because they're so used to hearing the same story from a financial planner which oftentimes only has 6 weeks of education to get to whatever that Series 6 or 65 that they have. It doesn't take much. And they're pretty much just pushing policies from their parent company that doesn't practice selling away, that's going to do everything possible to prevent you from investing outside of their portfolio, because that's what puts food on their table. They're not used to hearing authority investing into other investments, alternative investments. And I think it's important that those of us who do our part to increase the financial IQ of America in that way. They desperately need it.
Yeah, absolutely. And Patrick, you brought up your Amazon best-selling book, Persistence, Pivots, and Game Changers, turning challenges into opportunities earlier. But I'm curious to ask you about the process of writing the book, and whether you learned something new about yourself throughout the process.
It was actually a little terrifying. I went to a conference and I was speaking with some of the guys that were running it, and they were just, how have we not heard about you before? You're doing a lot of deals with a lot of people we know, and you're in great markets, but you're not out there at all. And I said, yeah. I said, that's just part of my nature. I do a lot less talking about it and I do more doing it. And they said, well, you should get your name out there. People will resonate. And they said, there's a guy that we know that helps people write books. And I tend to be the technical writer, being the engineering, machine design, automation, and robotics guy. And they got me a writing coach. And so there I was, and my wife and I were living in Hawaii during COVID. And I was writing various places, on my laptop. I had to leave the house just to kind of zero in and focus and brainstorm. And they would tell me, just get words on the page, just get words on the page. And I started getting my story out there. They started coaching me on dig deeper here, or this will resonate. This is just detail. This is not about, and then they really shaped it. They helped me really bring out the best parts and elaborate on things that I didn't really realize what people would really want to know, and make it more relatable and tell a lot of the challenges. It was be very vulnerable out there. And so I tell it all. I mean, I'm happy to provide a free copy to your listeners if they go to investonmainstreet.com/book. And I'm happy with the chapter as it came out. And if it contributes to anybody else's journey, let me know. Share on Facebook.
Yeah, absolutely. And I'll be sure to put that link into our show notes for the episode. But I'm also curious to ask you, Patrick, about the greatest lesson that you've learned in business that you've also applied to your personal life as well.
Well, it's so funny because when I answer that, I say partner up, because when I was trying to do early on a pre-development, and then when I got into single family, I was like a lot of my investors today, and I was trying to control everything. I was trying to find the properties, I was trying to buy them, I was trying to own my own money, I was trying to renovate them, manage them. And what I realized is, although I was an expert and the lead guy in my space at my job in automation, I knew nothing. And why was I putting all of this at risk? And so I learned to partner with other people, experts. And as soon as I did that, trust but verify and partner up, and of course do your due diligence, I started scaling with more time freedom. I started being able to do what I love to do, my superpower, what I'm good at, and then team up with other people that are good at other things that I'm not good at, that have more experience in things that I'm not good at. And that played a big role in the investing space. And in my personal life, I partnered up with my wife, and she is just a rock star in her own right. And she does animation producing for feature-length animated films for DreamWorks, Disney, and Nickelodeon. And she was the one who inspired me in a lot of ways, because she's the dreamer and I'm the analyst. And so her superpower is to think quite a bit bigger and challenge me in ways where I'll stay within the lines and the framework of just get the work done. And it was her idea to move to Hawaii. But I had it figured out, and I was on a plane in 2.5 weeks after that. And I'd say that partnership has just been really cool.
Sometimes being pushed out of your comfort zone is the best gift that we don't necessarily ask for, right, Patrick?
Yeah, 100%. Mm-hmm.
Absolutely. And men would be lost without women. That That's my philosophy in life. Whenever a woman gives me great advice, Patrick, I implement it immediately, right?
Most of the time. Yeah. Yeah.
Most
Most of the time. Yeah.
most of the time, right? Yeah, Patrick, I was trying to get you some husband brownie points there, buddy. So I'll tell your wife. She said absolutely when she watches this podcast. Okay.
Yeah. Okay. Edit that part out for me.
Absolutely.
Yeah.
Patrick, my final question for you this afternoon has to do with your own personal and professional legacy and how you want that to be defined.
Well, so what I believe in, I actually come from, and I don't talk about this a lot, but I come from a family of preachers that actually did great things out with traveling the world. And I like to be a good impact. I may not be a preacher, but I like to spread good energy and I like to create better lives. And I've gone from doing that from investors to doing that with the communities. And now in the space of the investing world, I am helping out other investors like myself get off their feet. And with our passive investors, I'm helping them diversify into safer, more diversified and balanced portfolios in alternative investments so that they can enjoy a little bit more sane and relaxed life with cash flow and appreciation. And so I hope that those that kind of give back and that outwardly focused with these podcasts like I'm doing right now, I'm saying yes to these now in hopes that, along the way I'm aspiring people to kind of push themselves a little bit past just the status quo of how they were raised and how their grandparents were raised, because in this day and age, it's not enough. It's not enough to get you retired and living the retirement of your dreams while leaving something to your heirs.
Yeah, absolutely. Life is all about networking, Patrick. I always tell people, they ask me why I'm so successful and positive about life. It's all about, I tell people that life is a constant game of networking, isn't it?
Yeah, 100%. It is.
Absolutely. And Patrick, tell me, if people want to get connected with you, what's the best way they can do that?
Well, if you have some interest in investments, we obviously have multifamily apartment investments and workforce housing. We have diversified energy funds, and we're launching a affordable housing cash flow fund, 12.5% cash flow fund, which provides for great cash flow to retire on in a year when it's going to be harder to cash flow in assets. And so invest on mainandthenstreet.com, invest on mainandthenstreet.com. You can see the investments at the top of the page we have. There's lots of content there. My articles in Forbes, speaking on economics and wealth building strategies. A lot of that stuff's up on the site. Quite a few blogs. If you want to copy the book, investonmainstreet.com/book. Ship you a signed hard copy for free. Just put in the name of this podcast as the promo code. And that way we know where you came from. You're not somebody random. And if you want to chat, set a meeting up on my calendar. Patrick, or investonmainstreet.com/contact. Investonmainandthenstreet.com/contact. And you'll see my calendar. I'd be happy to sit down and chat with you, see where you're at, and see if we're a good fit or if we need to point you in another direction.
Well, fabulous, Patrick. I want to thank you for joining me to engage in conversation about investments, real estate, life, and everything in between. And I want to wish you all of the best of luck with your continued endeavors, the best of luck being a new dad, and I want to thank you for being here this afternoon. It's most appreciated.
Kevin, pleasure was all mine. I really enjoyed it. Great questions and all the encouragement along the way. Hopefully come back sometime.